Hello and welcome to a talk on competitiveness in the individual pension markets in Latin America. This study is part of a larger study which I did with Stephen Kay and Barbara Kritzer, and our paper was published in the Social Security Bulletin. So in this study we will look at the profitability of the industry. Usually we measure profitability by a measure called the return on equity. A return on equity gives us a handle on how to compare cost between industries. So the critique has been that the industry has been very uncompetitive and has made large profits. So for example, in Mexico, the Competitive Commission has panned the industry by saying that over a period of time its return on equity has been in the order of 30% per year. This compares very unfavorably with other industries which are related, and it has not generated any benefits for the workers per se. The same result holds in Chile. There, the Marcel Commission had found that the return on equity has been fairly large over a long period of time when you compare that with the industry that's closely related to it, namely banking. In Mexico too, if you look at the year 2000 to 2006, the same thing also holds. The Afore industry has been much more profitable than the corresponding banking industry. However, this relationship is much less clear during the period 2007-2010. The only thing we have to keep in mind here, 2007 to 2009 had not been a particularly good time for pension industry as a whole, and therefore it had not been so for the Mexican pension industry either. In Peru, the story is pretty much the same. Over a period of a decade, you look at the pension industry compared with any other industry you care to name, the rate of return or return on equity for the pension industry has been astronomically higher compared with the other ones. Now, to measure profitability, we can take into account various other things. However, absolute profitability is somewhat of a complicated concept because it is affected by general economic condition. What we would like to see is how does this industry compare with others, as we did. So what we are measuring now is the excess profit that this industry has earned over the banks, and then relating that back to some industry benchmarks such as the number of companies that are operating in the industry. And if we do that for Chile, then we see that when there are large number of companies operating in this industry, the profitability has been lower. That is, excess profitability of the AFPs or the private pensions has been lower than the corresponding years where there have been more companies. Now, this is not enough to have too many companies in the industry for one simple reason, because benefit products are a very complex animal. They get their benefit at the end of 20-30 years. Therefore, this industry has a lot of problems in measuring until you actually retire. So what do we need? We need more financial education supported by the corresponding government and paid for by the companies. Thank you.